Hi everyone. Today let's talk about the Jolts report, the calendars, then we'll get into the charts, and my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So job openings are at their lowest point since 2021, sitting down at 8.73, a decline of 617,000 jobs, or 6.6%, much lower than expectations. Expectations were at 9.4 million. We ended up getting 8.7 million, just like we talked about. So much lower. The jobs market finally coming in a little bit softer. Continues to soften pretty regularly now. Unemployment claims have also gone up slightly. They mentioned the biggest sectors, education and health services, following financial services, hospitality and leisure. Interesting to see that one go down. That was one of the biggest hit during COVID, and it was one of the last to recover, and now it's declining here in terms of job openings. But this is exactly what the Fed wants to see. And I do think that's why we saw a little bit of a tick up in the tech and growth stocks, meaning that we are expecting a rate cut potentially sooner. And this reinforces that case now for potentially spring, but hopefully in the first half of this year. Moving over to the data for today, we got ISM non-manufacturing 50.7. It is positive above the 50 mark, but lower than expectations. Non-manufacturing PMI, pretty good, 52.7 above that 52 level. Non-manufacturing prices, higher than expectations, not what you would want to see. And then you can see Jolts way below expectations, even with expectations a little bit lower on this chart. You can see the previous number was also revised down from 9.5 to 9.35. And then looking at tomorrow, we got ADP non-farms. That could be interesting. Expected to be a little bit higher than the previous read. And then crude inventories have been interesting. And then Atlanta Fed GDP numbers also interesting. Obviously, non-farms are going to be the biggest for the day at 8:15. I also briefly wanted to mention Almanac Trader here. He's making a case for the Russell 2000 and 1000. He says typically there is a dip from July into November, December, which is where we are right now. And you can see we've had that dip. And then typically we see a rally from January through March. And that's what we're looking at now. We're right at that initial rally, slight pullback, and then we start to see a pretty solid rally back up to those July highs, which would be a nice move here for the Russell if we did get a move like that in line with historical averages. Looking at Max Payne, huge jump in options up to 1.4 million. Put call ratio still around that 2 level. And then you have put wall at 450, call wall 459. Basically nothing has changed. We're still in this range. And it does seem like that's where we're going to finish up for the week. Gives you about a 1% move potential in either direction. Moving over to the SPY, you can see we were basically sideways, 0.02%, and that momentum just continues to tick towards bearish ever so slowly. I've been thinking we were going to get it today. We were just off by 0.11, and if we get another step down like we did today, then we will be bearish for tomorrow on momentum on the daily chart, and that's obviously not going to be a great step after this rally. It's been super bullish. Does seem like we're set for that pullback. The Qs have already tested the 21, and if the SPY pulls back to that 21, which is sitting right around that 448.74 level for me, actual price is 449.27, so about $1 higher. So it does seem like that's what we're going to get once we can get below all of these EMAs and SMAs on the hourly chart. Moving over to the Qs on the hourly and the daily, you can see we're developing a little bit of a structure. We're below the 200, so things are a little bit more bearish here. We've been talking about the Qs lagging all the major indices right now, but we did get a slightly bullish day, 0.25% to the upside. Momentum still bearish, and it is continuing to get more and more bearish here, so we've followed through on that move, but price really hasn't broken down too much yet. You can see we tried in the pre-market. After that rally at the end of the day yesterday, fell pre-market, got close to those lows yesterday, couldn't quite do it. And then we rallied aggressively on that Jolts report, coming in a little bit weaker, gives stocks like this a little bit of room to the upside. And I think if the ADP non-farms come in and then the unemployment rate at the end of the week continue to come in weak, then we could see the NASDAQ rally up off of that data, indicating that we're going to see lower rates sooner. But right now, this is a downtrend. We are below the 200 on the hourly chart, at least on the shorter time frames. On the daily chart, we are in between the 9 and the 21 EMAs, so that is consolidation for me per my rules. So downtrend on the short term, consolidation on the medium term. Looking at levels, 386.20 to the downside, upside is 389.15. Moving over to the Russell and the Dow, like we talked about on Almanac Trader, it is a time to be involved in the Russell. We've seen a strong rally off of these most recent lows around 163. And it's continued to make sense, but we did just barely touch overbought conditions on the charts there yesterday. Then we got a slight down candle here today, 1.34% to the downside. Did get below my 185.63 level. Next support, 183.28. We'll see how that plays out. It was a very strong move on Friday into Monday, so it does make sense that we would see a little bit of pullback. But overall, this is still a bullish trend, and I am bullish here. And then looking at the Dow, another inside candle, does not look great. RSI is starting to roll over, momentum rolling over as well. Very similar in terms of indicators as the Russell, but obviously the trend on these is still both very bullish, just looks a little bit extended. Moving over to the SPY divided by the M2 money supply on the weekly chart. I continue to talk about this chart because it is at a super critical level. If you've been watching this channel for a while, I continue to bring it up. 22.05, super critical level for this ratio. And we are right there once again testing it. And you can see the last time we did it was 24 July. Pulled back massively from that level, consistent downtrend to the 144. Rallied back up here into this same zone. If it double tops, that's going to be quite the indicator. If it breaks down to that level and then breaks through, then we're going to be looking at a much larger down move for the S&Ps. Moving over to Apple and Tesla. Apple had a massive day. There was some news out about their potential growth during this holiday season, and they were up 2%. This is also keeping the NASDAQ up, in my opinion. I think the NASDAQ would have been more in line with the Russell, down around 1%, if Apple was not holding it up really strong here today. Momentum ticking back towards bullish. RSI still very close to overbought conditions, but you can see that step up in volume, big rally. Touched my level. 193.96, pulled back from that level, and now they're in an area of resistance. You want to see this break and hold, rally up to the next one, and that would be all-time highs here for Apple. Does seem possible. Apple back in the run to the upside off that momentum and off that catalyst. Looking at Tesla, not nearly as strong. Threw a big wick to those previous highs. Couldn't hold above the trend, couldn't hold above the 9 or the 144 EMAs. Pulled back, still a bullish candle, but just looks like another test in this consolidation, pending a breakdown in my opinion. Moving over to NVIDIA and Amazon. NVIDIA caught a bid here today, so it touched the 55-day moving average yesterday. Basically opened flat and then rallied pretty aggressively, 2%, back above 461.76, which is a nice move. This is still technically a downtrend. The 9 is below the 21 and VWAP, and if it pulls back to the 9 at 473.67 or hits my level at 475.33 and then breaks down from there, then that's going to continue this downtrend. Obviously, NVIDIA has been a massive rally this year, and I wouldn't bet on it breaking down massive, but you do have to look at what indicators. And right now it is a medium-term downtrend coming off of that 55 EMA with a step up towards bullish on momentum. And then looking at Amazon continuing to hang in here really strong above that 145.55 level after touching the 143.26 level, throwing a wick to these highs on bearish momentum. Right now, Amazon's still holding in there very strong, and it does look like there's some upside potential. Next level for me would be 150.14, and then above that, 153.54. Moving over to staples and discretionaries. Staples still grinding higher here with a down candle today. We've seen those a couple of times, still sitting on that 9 EMA after hitting that 70.85 level we've been watching. Overall, structure still bullish. No change to structure, just a slight bear candle, looks like a pullback in this uptrend. And then we saw a little bit of a flip here on discretionaries with that up candle still following after Tesla. It is technically above my level at 170.68 just by a couple of pennies, but really I'm calling that right on top of that level. No volume here. You can see big volume yesterday on that down candle, inside candle. Threw a wick to the upside, and it wouldn't surprise me if we saw a little bit of pullback more in tomorrow's session. Moving over to breadth on the 50 and the 200, we are starting to see some cracks here. We talked about this 83 level being important. We talked about being in overbought conditions on both of these charts, and now we're starting to see a little bit of breakdown. Big engulf on both charts, down 6% on the 200-day average, below that 62 level. RSI breaking below the SMA, back out of overbought conditions. If this starts to follow through a little bit more here, even down to the 21 EMA, that could be an indicator of some more downside into these first couple of weeks of December. And again, if you've been watching this channel, we talked about the seasonality. The first couple of weeks of December tend to be a little bit weaker, and then that end of year rally comes around that 15th of December. Moving over to the 2-year and the 10-year yield. 2-year basically flat from yesterday, down 1.2%, close to the open of yesterday's candle, so really consolidating here. 10-year, however, making a new low. Interesting, makes sense with the Jolts report coming in weak, jobs data coming in weak, yields are starting to fall, in anticipation of that weakening jobs data. Again, propping up markets a little bit. The Qs and the SPY typically respond better to weak data as they are propped up more by interest rates, whereas the Russell is more affected by actual weak economic data, whereas a weak economy equals a weaker Russell. Moving over to the dollar, we are at a critical level now. This rally in the short term continues, but we did get very close to that 21 EMA on the daily chart. Bullish momentum. Does seem like it's going to overthrow it in my opinion, but this is critical. Are we going to see a double bottom? So we rally up, double bottom or higher low setup and then rally through, or are we just going to go straight through it? Definitely interesting critical point here. If we see a little bit of a pullback in the dollar, could give equities a little bit of rally. And then we could see that double topping formation that I talked about in yesterday's video. But this remains to be seen. Critical level, if it rallies through, equities will be weak. If it breaks down, higher lows, and then rallies through, then we have a little bit more time to the upside on equities. Moving over to TLT, with the rally there today on TLT and the breakdown on bonds, this has gotten very close to that 144 EMA. Again, massive volume here today. RSI almost into overbought conditions. This has been a really strong rally from that 82 area up to this 94.60 level. I think it does have a little bit more upside potential, at least into overbought conditions, but not much left there on TLT until we see at least a little bit of a pullback. Overall, bonds still looking pretty strong. Moving over to the move and volatility indices, you can see move index rallying pretty aggressively with yields breaking down, makes sense. And then looking at the VIX, got a couple of wicks here yesterday and today up to that 21 EMA, slight bullish momentum, still holding a slight uptrend, not super strong. Definitely interesting though, when we tend to see these little slopes, that does tend to break into a little bit of an up move. You can see it here starting to slope higher and then break, starting to slope higher and then break. What happens after that? Obviously, I have no idea, but these little slopes to the upside tend to bring at least some kind of spike. It does seem like that's coming. Moving over to my accounts, I was basically flat on the day, made a little bit of money on the Qs, lost a little bit of money on the IWM. IWM was down a little bit more than 1%, but I was able to cover almost all of that with my covered call here. I did roll it down and in a little bit to 182 for $3.63 credit. Again, I'm still bullish on the IWM. If this rolls down a little bit more, I think I'm going to continue to hold that and just try to collect some credit on these calls. I do like the Almanac Traders idea of a Russell rally into the first quarter of this year. And then looking at the Qs here, I did have those 200 shares. I'm going to let those go on this 135 call. That means I was able to let those shares go for 187.39, which does give me a little bit of profit. You can see it closed at 187.29, so almost at max profit, but it was actually down a little bit more after hours. So either way, I get to collect all of that credit. I do have some puts here for 386 for tomorrow's session, already at about a 50% profit. Realistically, I probably should have taken those off and waited to see how we open tomorrow. I do think we might see another open down just like we did today, but we'll see how it plays out with the ADP non-farms tomorrow. Right now, I am basically neutral with a put and a call here, 386 for tomorrow and 388 for about 3 weeks from now. I think I've decided to allow this longer term put just to kind of hang out here. We'll see how that plays out. I do have a lot of theta on to help try to collect some more money on a daily basis on the Q positions, especially because I think we might see a little bit of weakness in the short term. Let me know down in the comment section what you think of the Jolts report or the upcoming jobs data for this week. Will it continue to be weak data? And will that drive markets higher and yields lower? Definitely an interesting thesis. Like and subscribe if you got any value out of this video. And of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.